There is a huge contradiction happening in the Solana market right now. And honestly, if you misread what's happening, you could seriously miss its next big move. We're seeing the network's fundamentals absolutely booming, but at the same time, it looks like big institutional money is sprinting for the exits. So what is really going on?
Look, ignoring this signal from the big institutional players is a massive mistake. It could cause you to completely misjudge Solana's next major price swing.
Get this, while the rest of the crypto market was looking pretty healthy, Solana ETFs got hit with a record-breaking single-day outflow of $32 million. I mean, that is a huge red flag that on the surface just makes no sense at all.
But you're going to want to stick with me, because by the end of this explainer, you are going to understand the crucial on-chain data that these ETF sellers seem to be completely overlooking.
Okay, let's dive into the messy part first. We'll start with the bearish case. What are these red flags that have so many people spooked?
What's really telling here isn't just the outflow, it's the contrast. You know, while major assets like Bitcoin and Ethereum were seeing small but positive inflows, Solana got hit with this massive, targeted sell-off. This wasn't a market-wide panic, this was laser-focused on Solana.
And when we dig in a little deeper, we see this was the single largest bleed since these ETFs even launched, and most of it was concentrated in just one fund, the 21 shares Solana ETF, or TSOL. And again, this all happened while other major cryptos were rallying, which just makes that selling pressure on Solana stand out even more. And all this institutional pessimism, well, it's reflected right there in the price. Solana's been struggling, just kind of hovering around that $140 mark, and it's down roughly 40% year over year. So the story the market seems to be telling us is pretty grim. But is it the whole story?
Not even close. Now let's flip this coin over and look at the other side of the paradox, the hidden truth that we can only find by looking directly at the on-chain data. This is the ground-level reality of what's actually happening on the blockchain itself, completely separate from all that market speculation.
And this number right here, this changes everything. While the ETF saw a $32 million outflow in one day, the actual Solana Layer 1 network, the core blockchain, saw a net inflow of over $321 million in the last month. The money isn't leaving Solana, it's pouring into the ecosystem to get put to work.
So, this brings us to the crucial question, right? If the big institutional players are selling through ETFs, then who is behind this massive $321 million flood of cash directly onto the network?
And while you think about that, if you're getting value from deep dives like this from Crypto Global News, do us a favor and make sure to like, share, and subscribe. And definitely hit that bell icon so you never miss a critical market update.
All right, let's solve this mystery. How on earth can we have huge ETF outflows and, at the exact same time, massive network inflows? It's time to bring these two completely opposite stories together.
It really boils down to two key factors. First, what we're probably seeing is what you'd call an institutional position reset. Investors are just rebalancing their portfolios, not dumping Solana. And second, that speculative craziness around meme coils has cooled off a bit, which can make surface-level stats like daily active users look a little deflated, even while the core network is growing stronger.
So what exactly is a position reset? It's not panic selling, not at all. It's a strategic move. An investor might sell out of one fund to move that capital into another one, maybe one with better fees or from a company they prefer, but without losing their core belief in the asset itself.
And this timeline just illustrates the point perfectly. Right as we saw those record outflows from that 21 shares ETF, what else happened? The financial giant Franklin Templeton launched their own Solana ETF with the ticker SOEZ. It is highly likely that some of those institutions were just selling TSOL to buy into the new Franklin Templeton fund. It's a rotation, not a retreat.
So let's put all the pieces together and just look at the big picture. The story that market sentiment is telling us versus the story being told by the network's core fundamentals.
On one side, you have that bearish sentiment. Record ETF outflows, a temporary cooling in active addresses because of the meme coin thing, and that 40% price drop. But on the other side, you have these incredibly bullish fundamentals. Over $321 million flowing into the network, super high utility, and the very real long-term potential to rival major players like BNB.
So what does this all mean for you? Well, whenever you see a huge disconnect like this between short-term feelings and long-term facts, it often points to one thing: a potential opportunity.
The argument is actually pretty simple. If you can look past the noise of the ETF flows, you might just find what some of the top analysts out there are calling one of the most undervalued networks in all of crypto, especially when you compare its price to its real-world utility.
Now, in the short term, we do have to be realistic. A major catalyst for price action does seem to be tied to one really specific and volatile sector. When the meme coin market heats up again, it often acts like a massive shot of adrenaline for the Solana ecosystem, bringing a ton of speculative interest and volume back to the network.
And that leaves us with a final and pretty crucial question. For all its fundamental strength and all its utility, is Solana's price now just permanently attached to the wild, unpredictable boom and bust cycle of meme coins? That's something the entire market is going to be watching very, very closely.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.